Thanks for tuning in to this week's news recap. Vigilante Group sets out to find Do Kwon. The Financial Times reported that a group of Terra investors is trying to hunt down Do Kwon. Members of the UST Restitution Group, which has about 4,400 members, have named possible locations for Kwon such as Dubai, Russia, Azerbaijan, the Seychelles, or Mauritius, amongst other locations. They plan to start looking for him in Dubai since, as one member posted, Dubai is friendly to crypto, very international, he would not stand out, and has limited extradition treaties in place. This person added, "It would seem like the best fit for the 3 to 5 hour time zone shift apparent in the data." The group even claims to have people who are very, very close to Do Kwon. Their expedition to Dubai starts in little over a week. Aptos launches on Mainnet, but gets a negative reaction for its tokenomics. On Monday, Aptos Labs confirmed the launch of its mainnet, Aptos Autumn. Aptos is a Layer 1 blockchain created by former Meta employees that had raised as much as $400 million from investors like A16Z, FTX Ventures, Jump Crypto, Multicoin Capital, Binance Labs, Coinbase Ventures, PayPal Ventures, and others. Disclosure, I write a newsletter for Meta's Bulletin product. The launch got a lot of criticism on crypto Twitter for not disclosing the token allocation scheme, especially considering that big exchanges like Binance and FTX listed the Aptos token on their platforms. The following day, Aptos posted an overview of its tokenomics, which said that only 51% of the tokens would go to the community, raising a lot of concerns about the decentralization of the blockchain. Additionally, Aptos was accused of benefiting early venture capitalists way too much. Olaf Carlson-Wee, the founder and CEO of Polychain Capital, a crypto VC firm that did not invest in Aptos, tweeted, "Aptos token distribution scheme is among the worst designs I've ever seen, and I've seen a lot. Foundation 67.5%. Team 19%, investors 13.5%. The only way coins get into the community, LOL, is through arbitrary foundation and distributions. So the entire supply is controlled by a bureaucracy which will grant the coins one by one. It's also proof of stake, so new coins cannot be earned by actors outside this distribution method. I would love to hear an explanation from any person who thinks the design is good." DC Investor, a crypto influencer, wrote, "The near categorical rejection of Aptos created by ex-Libra devs as a fairly blatant cash grab, and of course funded by the usual suspects who've extracted billions from the space, may be one of the most important social shifts we've seen in the space in a while." Voyager executives to settle on potential missteps. An investigation in the bankruptcy case of Voyager Digital recommended that the executives of the company settle on alleged mismanagement. Voyager CEO Stephen Ehrlich and previous CFO Evan Saropoulos lent Three Arrows Capital nearly $1 billion in crypto. But following the implosion of Terra and its stablecoin UST, the crypto hedge fund went bankrupt and failed to repay the loan to Voyager. The executives were under investigation to discover whether they had failed to perform proper due diligence on the loan. However, there was no clear evidence of mismanagement or fraud, making it very hard to prove it in court. The conclusion was that executives settled for an amount between $1.3 million and $3 million from their personal assets and up to $20 million through insurance. Only a few days before, a court filing revealed that the top executives of the company were seeking legal immunity, an idea which was received with a lot of contempt from Voyager's creditors committee. Additionally, Three Arrows Capital is being probed by the CFTC and the SEC, as reported by Bloomberg. According to the media outlet, the agencies are trying to redefine whether the failed hedge fund misled investors by not disclosing the weakness of its balance sheet. The location of the company's founders, Sue Zhu and Kyle Davies, is still unknown. This week, it was revealed that the liquidators of 3AC are seeking to issue subpoenas to the company founders in alternative ways. Texas regulators investigate FTX and Sam Bankman-Fried. FTX and its founder and CEO, Sam Bankman-Fried, are under investigation by regulators in the state of Texas. The inquiry has to do with FTX's yield-bearing accounts to U.S. customers. Regulators believe these may constitute securities and would be in violation of securities law, according to Joe Rotunda, the Texas State Securities Board Enforcement Director. Rotunda said that although he registered as a U.S. resident, the FTX app offered him a yield opportunity, which could be considered an investment contract. The probe may put in jeopardy Bankman-Fried's acquisition of Voyager Digital's distressed assets after he won the auction and agreed to pay the bankrupt crypto lender $1.4 billion. New draft bill sparks concerns about financial freedom. Delphi Labs General Counsel Gabriel Shapiro revealed a secret new draft of the Digital Commodities Consumer Protection Act, or DCCPA, which the Commodities Future Trading Commission would use to regulate the crypto industry. The language of the draft would exclude software developers from being counted as digital commodity brokers, which according to Shapiro could be a boon to DeFi/crypto. Still, the draft raised some concerns about its potential impacts on crypto and financial freedom. On this issue, Congressman Tom Emmer wrote, "Decentralization is the point. If we sacrifice DeFi for legislation, we're throwing away the opportunity." The DCCPA was introduced by Senators Debbie Stabenow and John Boozman in August and has gained support from crypto giants such as Coinbase and FTX. However, the Blockchain Association tweeted that the bill needs to be changed or it would create a ban on decentralized finance. Additionally, SBF published a 3,800-word industry norms manual in which he proposed enforcing regulation, including sanctions, on decentralized finance protocols via their front ends, and he got a very negative response from the crypto community. Ryan Adams, host of Bankless, said to SBF, "This absolutely sucks and would eliminate the US from the crypto race." The Blockchain Association backs Grayscale in its case against the SEC. Grayscale Investments won another supporter in its case against the Securities and Exchange Commission over the agency's rejection of a spot Bitcoin ETF. The Blockchain Association, an advocacy group focused on blockchain policy, submitted a brief in the Grayscale suit, supporting the investment firm's claim that a failure to approve a spot product constitutes uneven treatment. The Blockchain Association joined other big advocacy groups, Coin Center and the Chamber of Digital Commerce, in supporting the case. The SEC's unwillingness to approve a spot Bitcoin ETF has been a major concern in the crypto community. A spot ETF would help institutional investors put money into BTC, but until now there have only been futures ETFs. The Commission's use of a double standard to evaluate Bitcoin futures ETPs and spot ETPs is not only bad policy, but also in contravention of law, said the Blockchain Association filing. On a related note, another firm that is joining a lawsuit to show support is Paradigm, a crypto venture fund. Paradigm joined the UkiDAO case, arguing that the Commodity Futures Trading Commission, or CFTC, should properly serve its members instead of the DAO as a whole. To refresh your minds, the CFTC tried to serve UkiDAO members in its forum, a move widely rejected by the crypto legal community, although a judge ruled that the members had been properly served. Paradigm added to the efforts of LexPunk Army and the DeFi Education Fund, which previously asked for permission to add similar amicus briefs. NFT royalties. Who can solve this problem? After Magic Eden, the largest NFT marketplace on the Solana blockchain, announced it would not enforce royalties on its platform, the debate about NFT royalties spiced up again. Magic Eden's decision to move to optional royalties was not taken lightly, according to the team, which argues it was the best business decision at the time. Over the weekend, I teamed up with Li Jin to debate with Haseeb Qureshi and Joshin Yin about NFT royalties in a special episode of The Chopping Block. Special emergency episode, you could say. Basically, Li and I argued that cutting royalties constitutes short-term thinking, whereas Haseeb and Joshin said that as royalties are not enforceable on-chain, it was inevitable that marketplaces would start moving to this model. Generative NFT artist Tyler Hobbs told Decrypt that losing NFT artist royalties would be a tragedy. Also, speaking of NFTs, the U.S. Internal Revenue Service revealed a tax guide that puts stablecoins, cryptocurrencies, and NFTs under the same rules, requiring sales of them to be taxed as capital gains. Binance holds great power on Uniswap by accident. Crypto exchange Binance unintentionally became the second largest voting entity by voting power in Uniswap DAO after A16Z. Uniswap is a multi-chain decentralized exchange with a total value locked of $3.5 billion. Binance delegated 13 million Uni tokens and was able to accumulate 1.3% of governance voting power, according to Uniswap founder Hayden Adams. However, another user pointed out that Binance could have as much as 5.92% of the total voting power. Hayden called this a very unique situation, as the Uni technically belongs to its users. To this point, Binance responded, "Binance doesn't vote with users' tokens. In this instance, about 16 hours ago, 4.6 million Uni was transferred between internal Binance wallets, causing the Uni to be instantly automatically delegated. This was not our intention." Mango Markets hacker reveals his identity. The drama around the Mango Markets hack continues. This week, the hacker revealed his identity and claimed his actions were legal in open market conditions. Avraham Eisenberg confirmed he was the person behind the attack and said, "I was involved with a team that operated a highly profitable trading strategy last week." Following the confession, Mango Markets announced that Eisenberg had given back to the DAO crypto assets worth $67 million, as was agreed in a governance vote. It looks like Eisenberg has some experience in hacking DeFi protocols. Earlier this year, Eisenberg was accused of being responsible for an exploit on Fortress DAO worth $14 million. On a related note, this week, a hacker stole $8.4 million worth of tokens from DeFi lending protocol Moola Market. However, they later returned 93% of the funds, keeping approximately $500,000 as a bounty reward. Time for fun bits. The wildest conspiracy theory about me. Covering crypto, I've definitely been the subject of some off-the-wall conspiracy theories. Hey there, XRP Army, Wrapped Luna Gang, Cardano folks. But the funniest conspiracy theory I've ever seen is this one, which was a reply to CoinDesk, who tweeted out an interview they did with me, asked me questions about my chat with Do. In it, I said that until we have definitive evidence of malfeasance, we can't yet conclude whether or not Terra was a fraud. Ella Vega responded, "She falling in love with DK, same way reporter Christy Smythe fell in love with Martin Shkreli before he went to blank prison. We all know what happens next." No, we don't. By the way, question for my male crypto reporter colleagues. Has anyone ever tweeted anything even remotely similar to you? Please let me know. All right, thanks so much for joining us today. To learn more about Fat Man Terra, Do Kwon, and the collapse of Terra, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Anthony Yoon, Matt Pilchard, Juan Aranovich, Pam Majumdar, Shashank, and CLK Transcription. Thanks for listening.